Hey everyone, it's good to see you here. Bill and I are here just chatting about what I think is super positive. The rates over the past couple of days have just gone up to, and I think from what I read, it's about the jobs report that's come out as kind
Yes.
of a reaction from the market. Is this
Re-
lower interest rate?
Yes. The couple reports that have come out have shown cracks in the labor market,
Mhm.
which is kind of what we've been waiting for a little bit. And then also the fact that inflation hasn't really been impacted as much as was anticipated by the Fed. So now it's like, okay, the reason for waiting is basically gone. So
Mhm.
now it's time to start acting.
Oh,
And I would say rates they haven't tanked, but they're cooling off. And what it's allowing is the investors to get back the gains now. So investors, when there's a very volatile market like we've had the last, let's just say 7 years, right? Be really,
uh-huh.
when I first got in the industry, a 5 basis point change in a day was a big deal. And
Mhm.
now I feel like we have 100 basis point changes within an hour.
Okay, so
So
explain to somebody who doesn't know what is a basis point.
basis point is the scale, what controlled the bond market basically.
Okay.
So
Mhm.
essentially
I can
like,
equate like, does 1 basis point equal something? Like,
yeah, so like, yes. So like half a basis point is about an eighth in the rate.
okay.
So a full basis point is about a quarter. So that's kind of like the rule of thumb. Now there's middle ground, it
Right,
shifts
but
and
it's just
stuff
an
like
easy
that.
kind of general knowledge.
Yeah, I mean, we would have 0.5% shifts in a day if you look at a
Oh,
rate sometimes when the market is very volatile. So naturally, the investors, if we have a great day, they're not going to give us back the gains instantly. They're afraid that in the next 2 days, it's going to be given back. And then they lose that. They lose a lot of money, right?
right.
So now with this calming of the rates and more of a clear direction of where rates should be going next few months to a couple of years, it's given the confidence of the investors to get back those gains. So that's where you're
Mhm.
seeing these rates finally, like the market didn't shift as much as rates have come down, but now it's the investors feel comfortable giving back those gains because they don't think the market's going to give it back.
Okay, so I have a question. So, like, I get this app that's called Mortgage News Daily,
Mm,
right? And a lot of people have this. And I look
I
at
do.
it, right? I can kind of like the rates and where they are, but I
Yeah.
understand like what this 6.28% means today, right?
Hmm.
But there's people I know who are going to call you and be like, when you quote them something different, say, hey, wait a minute. Per Mortgage News Daily, that's not what the rate says. Why are you different? So, what does this mean compared to when somebody calls in? Like, what's the difference there?
Yeah. So best way to compare that out to is like Credit Karma.
Oh,
Okay.
okay.
So when you're monitoring your credit, it's like it says 800, but then you get your credit pulled, you're at 700, right?
Mhm.
So it's great at showing trends, is what I say. So like if you're out there, you're on the fence, it's trending big time to go that they're coming down, right? But it doesn't mean that's always the rate that's out there. It's really a national average, and they don't ever break out how they got to those rates. When you're quoting rates, what are you putting 50% down, or are you putting 5% down,
Mhm.
right? Big impacts. Or do you have an 800 credit score, or do you have a 650 credit score? Big impacts that are impacting how those rates are created and how the rates that come out that we're allowed to actually offer are different.
Do
Um,
different states like, so let me ask you this question. What like, so you write loans in different states. So
mhm.
let's say you have someone in Arizona who's thinking, okay, I'm gonna buy either here in Arizona or let's just pretend you write where do you write in Washington? Is that one of the states you're in? No,
Colorado,
Colorado.
California.
Okay. All right. Well, so let's say they're gonna move to Colorado. And they say, I can buy a house in either place, Arizona or Colorado. Does where they're moving to the state matter in their rate? Does that make a difference in any way? Or is it just basically the person?
It is mostly the person,
Okay.
you know, income, assets, credit, right?
Okay.
Are the big three. But when you look in different states, sometimes rural areas can impact those rates. Sometimes the programs too that are available in those states,
Oh,
right?
okay.
Like a nice one, if you have your own down payment, you're first time home buyer, but you make in Arizona less than around 85, 87K, you have the ability to jump into this program called the whole home ready program. And that gives you a little better interest rate, a little better mortgage insurance. Whereas maybe Colorado, that income max is more like 120. I'm guessing, but
Right. Just
try
because
to
the
pull it
right.
out because it's
Yeah.
based on the area median income.
Okay.
So there's a lot of different programs that can be impacted by different areas based on the area median income of that area, and then sometimes the location of the house.
Mm-hmm.
I was talking with a client that was doing an investor loan, the bank statement or DSCR loan,
Mm-hmm.
um, for a rental property. And there was a big impact in the rate by almost 1/4%, whether they were dubbed in a rural area versus a non-rural area.
Oh, okay.
So, that's just examples. That's one of those out of the box ideas of private lending, but that could be a little different right there. And that's one thing that number, that app doesn't take into account. Right. Or the other side is if someone pays, say 2, 3 points to buy it down, right? They
Mm,
don't take that into account. So like if you looked at the numbers and compared the rate the person has on the APR, you'd see a big jump in that difference.
right.
They paid
Mm,
a point, 2, 3 points, whatever they decided, right? So
mhm.
that's where, but I love that app and the fact that it will show you the trends of where it's going, of where the rates are
Yeah.
going,
And it
and
does
for
give a little
clients.
like scenario on why they're going either up or down.
Yeah,
Like
exactly.
things
So
going.
it just gives you that feel good feeling, like, okay, we're heading in the right direction, but my rate might be a little higher for whatever reason, right? My
Right.
credit score, my down payment, location or program. That's what I always tell everybody is that, like, look, that's a great app. And yes, that is probably the national average. Now, where they get all that data, I don't know because it's not always public record either,
I
right?
thought it had to be.
Not the rate, not the rate necessarily. It's not
Oh,
always
okay.
so like where they get that information is I don't know where they get it, but it
Uh-huh.
gives a good trend of where things are going. So that
Okay.
clients could be prepared. Okay, they were on the fence because it was trending up every day,
Yeah.
but then now it's trending down. It's like, okay, well maybe this is the time, right? Or maybe if you've bought in the last 3 years or so, and you're like, okay, I want to refinance. Now it's trending in the right direction. This might be a good time to cash out.
Yeah. Okay. Well, yeah, because that's true. Well, I think the problem becomes that people are like, well, if I go too early, is it going to go lower? So I'm sure a bunch of people kind of keeping their eye right now on it. And so maybe let me ask you that question too. So let's say someone locks in their rate, and I think we've answered this question before, but it doesn't hurt to bring it up. Let's say someone locks in their rate to refi or to buy. Oh, all these, I love these reactions. I did enable my reactions because I kind of think they're fun sometimes. So anyway, what happens if someone locks in and
Mm,
their rate drops? Let's just say a significant amount. I don't know, like little, like
yeah.
let's just say big day for some reason and it drops a significant amount. They've
Right.
already locked in their rate. Do they have the ability to renegotiate that rate with you or what can happen?
We talked about this before because you said the key word, renegotiate.
Yeah.
When you have a big shift in the market like that, especially an unexpected shift, obviously you wouldn't do it the other way. But if they come down, we have a chance within that 30 days or whenever that lock is set at to
Okay.
renegotiate that rate, to send it back to the investors and be like, hey, rates dropped, let's just say 100 basis points, 1/4%, right? That's a
Yeah.
pretty big shift.
Right.
And normally they will give us that better rate and relock it lower.
Okay.
Uh, and the reason why the investors will do that is, first of all, it's right by the client, right? Now, if you have a small little shift where it doesn't really impact the rate, they're not going to do that because it doesn't make sense
Mhm.
to do it every 2 seconds. But big shifts, and then also selfishly for them, it avoids a refinance sooner or later on,
That
right?
makes sense. Right.
So
Because they may not have that loan that long because if the rate goes better.
what if they close and the next day they're like, oh man, rates are 0.5% better, they're going to refinance and the investor's going to lose money anyways. So
Yeah.
that's an opportunity for us to make sure the clients have the best, to lock to be safe sometimes because of the volatility of the market.
Yeah.
But it gives the client that peace of mind a little bit, that they're getting into the best rate out there.
That makes sense. All right. So one real other fast thing I read that the Trump administration is potentially thinking of declaring a housing emergency for the fall, which from what I understand means that they're going to try and loosen up some of the restrictions on builders and the ways to build new homes. So more from the perspective of growth,
Mhm.
but part of it, I believe what I understand is that the rates may come down to make housing more available to people and more affordable. So I guess that's something we'll just keep our eye on to see if this actually does come. I read that the last time this happened was like in 2008 to help us from the 2005, 6, 7 stuff. So we'll keep an eye on that, see if that does happen this fall. I don't know if you have any more information on that.
I mean, I was just actually before we got on the phone call, I was reading more on that to kind of dive into it a little
Oh,
bit
okay.
more.
Yeah.
Um, but I think ultimately what that plan is to get more affordable housing out there.
Mhm.
It's not, it doesn't sound like they're going to help builders move things quicker on the multi-million dollar homes. It's going to be more of the high density housing or maybe the bigger subdivisions to get that
Right.
supply. Because I think what they're saying is, and we see in the Arizona market especially, the supply really still isn't there if you think about it. And if the rates come, that supply is going to drop real quick. So I think they're trying to balance that out to make that easier to keep the supply up to help. And then hopefully in turn, the Fed is cutting the rates and we're able to get those better rates out there to make it more affordable. Uh,
Yeah.
you know, it, people can afford, something with a 5 on it instead of a
That's
7,
true. Yeah.
right?
It's a big difference.
That's a difference of 700-800 bucks a month.
That's
That's, that's,
huge.
that's a car payment. That's groceries. That's a big difference.
Yes,
When it comes
absolutely.
to affordability, which I agree is an issue that is definitely new to Arizona in the general history.
Yeah, we've
Not
always been a
necessarily.
very affordable area until recently. Well, we have a lot of people who move here. We had something like in 2022, I think it was like just it was an insane number, like 300,000 people just from California alone came here. That doesn't include other states. So
It was a smoking deal at the time for them
it
for
really was. And,
sell their million and a half home and get an $800,000 home.
right. So,
But I think that's I think it's a new thing to Arizona, but I think there's a lot of good things coming to really stabilize the housing market and potentially improve it.
yeah.
It's just a matter of when will those things come.
Yeah.
So, but it's exciting to see where we're heading right this second. I'm swamped pre-qualifying clients,
Mhm.
getting people out there, helping clients from the last couple of years to maybe get a lower rate. That has been my life the last couple months because it's building, it's coming. So
I agree. I feel the momentum's picked up. The pendulum swings. This is how it always goes.
yeah,
So
yeah.
we have been much busier, and I've got a lot of stuff coming up in the next couple months, which is great. And so looking forward to having some new buyers, some new sellers, and just kind of helping people through this really fun moving around targeted. Like you can't hit the target right now; it's like impossible. So it's
Oh,
you can't wait. You can't say I'll wait for this or I won't wait for that or this will happen or that'll happen. There is no magic 8 ball that's going to tell us what's happening next. I mean, there are some pretty smart people who can project things, but it's just pretty smart people also not be right.
you don't
Because
have to be right once.
yeah, that's true.
Think about it.
There's this one guy, I can't remember his name, it's some economist or something. And literally, he's predicted like it's some crazy number, like 120 things, and he's gotten like 4 of them right. But yet
Yep.
people still listen to him. I'm like, why? Like, how does someone become that credible without even being credible? Like, I don't get that, but
They only have to be
uh,
right once.
I
So,
guess so. Well, thanks for hanging out with me again today, Bill, and chatting. And if, of course, anyone has any questions or, if you have any information that you want from either Bill or myself regarding buying a home, selling a home, just kind of general education. Bill and I love educating people. We want them to always have the best information possible. So we're always here for you. But thank you, and I'll see you next time.
see you next time.